Good morning, this is Phillip Streible, Senior Commodities Broker at R.J.O. Futures, giving you your weekly metals commentary here for Wednesday, February 20th. Looking at the metals, they're still under a significant amount of pressure. We saw gold break through the $1,600 mark, which was key level of support here yesterday. Taking through that, looks like we're heading down to well into the 1580s. We were like 1589 when I left the desk. We bounced off like 1590 a couple times, but still looks like the downward assault is still happening. I had actually called the trading floor, talked to them, and they said that nothing had really changed on the gold market. They had only felt that the liquidation pressure was coming from smaller investors that were just unwinding positions where the pressure had become too great because of margin calls and because of losses on the positions. Now fundamentally, later on today, you're going to have the FOMC minutes. And a lot of people were anticipating that they would come out and make some either adjustment to, the time frame of quantitative easing, how long it would go. They're still under this $85 billion a month program. I think that that's going to continue, and I think that traders have it wrong that that they'll unwind it sooner rather than later, because we're nowhere close to that target of the 6.5%. I think job growth is going to ultimately stall. We saw some weaker housing data also this morning, and I don't think that the housing recovery is going to be quite as fast as what people are anticipating. And I think that it's going to take well out into 14 or 2015 in order for that type of stuff to occur, which is in line with what the Fed's original comments were. I just think that people are being overzealous by thinking that this whole turnaround is going to happen right now because the stock market is up near record highs. Now looking at silver, it's been under that same assault as gold. We broke through, right around the $29 area, which is a key level support. Downside below that's about $28.73. Looks like another level of support. But ultimately, I think once option expiration is over here next week, I think prices will start to climb back up, recapture that 30, 31, 32. I still think that they're contained between that 32.50 and whatever this bottom happens to be this time around. I think that that'll form this new triangular wedge. Now platinum and palladium, on the other hand, they are under liquidation pressure here today, most likely because a lot of people who hold those metals also hold gold and silver along with it. And I think that that's why they're liquidating platinum and palladium. If you look at platinum though, there's been a lot of fundamental support that's been out there. I mean, there was some shootings, some of the African mines over the weekend where they had the authorities had used rubber bullets on some of the workers. What that does is it causes labor unrest and labor strikes, and generally you'll see supply and demand, well, mainly the supply will end up being crimped as a result of that. Demand has been fairly firm with firm automotive sales from around the globe and also debasing of currencies. So I think that your strongest metal is going to be your platinum, your second's palladium, and then so on down the list. Oh, and then the other market here, copper. Copper prices are finally starting to roll over. Some of the contacts I have in like Shanghai, they're saying that their supplies are quite high, that the fundamentals don't justify these higher prices. So I tend to agree with them. So I would anticipate that copper prices most likely have some kind of correction from here. If you have any questions, futures option trading, give me a call, 1-800-438-4805. Remember that futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.